Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Today, we take a look at two of the stocks in the conglomerate sector, ANSA McAL and GraceKennedy Limited, for their first quarter results ended March 31st, 2017. Both groups managed to report lower earnings, although attributable to different reasons. Let's take a look first at ANSA McAL. And for the quarter ended March 2017, ANSA McAL recorded an earnings per share figure of 78 cents, some 2.5% lower than the 80 cents per share recorded in the prior quarter in 2016. Revenues were down just around 1% from 1.41 billion to 1.39 billion, but despite this, operating profits managed to increase around 4.5% from 206 to 216 million TT dollars. As you can see, profit before taxes also increased from 204 to 214 million dollars, but there was a higher taxation expense, which led to profit after taxes decreasing just marginally for around 0.7% from 156 to 155 million dollars. In terms of profit before tax contribution by segment, there was a mixed bag somewhat. The automotive trading and distribution segment decreased around 25% from 39.9 to 30 million dollars, and this was attributable in part was contributed to by around a 25% decline in new motor vehicle sales in Trinidad and Tobago alone. The manufacturing, packaging, and brewing segment for the first quarter recorded a notable increase from 70.3 to 81 million TT dollars, and that could have been supported by some acquisitions which came into effect and may have contributed to overall profits in that segment. Similarly, the insurance and financial services segment recorded an almost 62% increase in profit before tax on account of a very strong performance by ANSA Merchant Bank, and the media retail services and parent segment declined from 43.9 million in profit before tax to 20.3 million. Looking at revenues generated by country, we note that ANSA McAL does have a significant exposure in terms of revenue generation to the Barbados and Trinidad and Tobago markets, two economies or territories right now which seem to be under some pressure in terms of economic performance. And here we can see Barbados accounts for around 15% of revenues, while Trinidad and Tobago accounts for just around 76% of revenues. So in total, over 90% of revenues for the group is generated from just these two territories. So how does McAL stack up to the competition in terms of the other stocks in the sector? Well, at the price of $66, it trades at a trailing price-to-earnings multiple of around 16.5 times, and ANSA McAL is in yellow, as you can see, and offers investors a trailing dividend yield of just around 2.3%. However, it does have a relatively low dividend payout ratio of around 37%, which means that there is scope to preserve the dividend. So, on the basis of relatively muted performance, weaker performance or outlooks in their major operating territories, but given that they're relatively stable in terms of pricing, we maintain a neutral rating on ANSA McAL. Turning quickly to Grace, for the 3 months ended March 2017, GraceKennedy recorded an earnings per share figure of 8 cents TT equivalent, which is a 32% decline from the 5 cents recorded in the prior period. Total revenues increased around 7% from 1.17 billion TT equivalent to 1.25 billion TT equivalent. However, profit from operations decreased some 31%. As you can see, net profit for the period decreased overall some 28% from 84.4 million to 60.4 million TT equivalent dollars. Now, in the first quarter of 2016, there was a one-off gain, which did not, of course, recur in the first quarter of 2017. But even after making adjustments for that item, adjusted net profit still fell around 2.25% from 62 million TT equivalent to just around 60 million TT dollars. In terms of profit before tax contributors, as we can see, the money services segment in red regained its top spot as the major contributor to profit before taxes, accounting just for around 8.3% of revenues, but contributing just around 45% of profit before tax. The food and trading business, which accounts for closer to 80% of revenues, delivered just around 38.4 million TT equivalent in profit before tax in the first quarter, or around, again, about 43%. Now, in terms of revenue generated across different regions, Greece has seen a positive trend, and I think it has been a deliberate strategy of the group, whereby revenues generated from the North American and European regions, where they would typically earn hard currencies or major currencies, has been increasing. And since 2013, those revenues from those two jurisdictions would have increased from around 30% to its current level of around 41%, reducing that reliance on the Jamaican economy. And of course, earning hard currency is definitely a positive for the stock. Again, Greece, in terms of how it stacks up against the competitors in the sector, in red, at its current price of around $2.85, trades at a PE of around 15.2 times and offers a trailing dividend yield of around 2%, below that the average sector dividend yield of 2.78%. Of course, it does have the lowest trailing dividend payout ratio of just under 30%. So on the basis of our relatively muted performance and slightly above average valuations, we maintain our neutral rating on GraceKennedy based on its latest results. That's it for this week's edition. For more information, give us a call at our new number, 2-BOURSE or 226-8773. Email us at invest@boursefinancial.com or visit our website at bourseinvestment.com. Have yourselves a great investing week. This has been the Bourse Report.